2025 has been a year of surprises in the market. While everyone was watching US tech, a massive rotation was happening right under our noses. The US stock market set 36 all-time highs in 2025 through October, remarkable for an aging bull that entered its fourth year that month. International markets saw some of their strongest gains in a decade, and the traditional safe haven ETFs showed us exactly why they belong in a balanced portfolio. Today, we're breaking down the four top performing Vanguard ETFs of 2025, from international dividends to the S&P 500. But more importantly, we're looking ahead. Based on Vanguard's 2026 outlook, is it time to double down on these winners, or is the big rotation just beginning? Let's analyze the data and see where the smart money is moving for 2026. Welcome back to Thinker's Mind. First, let's talk about the dark horses of 2025, VYMI and VEA. While many investors were hyper-focused on the US market, international developed markets were quietly staging a massive comeback. The Vanguard International High Dividend Yield ETF, VYMI, was a standout performer, returning nearly 32%. Why? Because it captured the recovery of European and Japanese value stocks that were trading at massive discounts for years. Close behind was VEA, the Vanguard FETS Developed Markets ETF. It gave investors exposure to heavyweights outside the US that benefited from a stabilizing global economy. For those who diversified early, 2025 was the year it finally paid off. Then we have the gold standards, VOO and VUG. The S&P 500 and Vanguard's Growth ETF continued their momentum, primarily driven by the big tech expansion and the rapid integration of AI into corporate earnings. VOO delivered a solid 20 to 22% return. It's the backbone of most portfolios, and for good reason. It's cheap, efficient, and captures the best of the US economy. But towards the end of 2025, we started seeing some frothiness in the prices. Growth stocks, represented by VUG, began to feel the weight of high expectations. As we head into 2026, the question isn't whether these are good companies, but whether the prices have finally outpaced the reality. So, what's the move for 2026? Vanguard's own outlook is calling for a big rotation. They believe the strongest risk-return profiles for the next decade aren't in high-flying tech, but in high-quality bonds and value stocks. Vanguard expects US stock returns to be more muted, around 4 to 5%, nearly single-handedly due to the high valuations of tech companies. This makes VEA and VYMI even more attractive for 2026 as catch-up plays. Is it worth investing? Yes, but 2026 is about balance. If you're overweighted in tech, now is the time to look at international developed markets and US value to protect your gains while still participating in the AI-driven growth expected in the years ahead. Just a little disclaimer that I am not a financial counselor and this video is for educational purposes. Investing is about thinking ahead, not looking back. If you found this analysis helpful, hit that like button and subscribe to Thinker's Mind for more data-driven insights. See you in the next one.